All right, good morning, everybody. Welcome to the Mike Raines Real Estate Channel. I'm Mike Raines, your host. And today I want to be able to cover a market update for you. Things are changing in the real estate market. And so I want to bring this information to you right now. So don't forget to subscribe to the channel, like this video, and drop a comment in below and let me know what you're experiencing in the real estate market. I'd love to hear from you on that. So today I'm going to be looking at inventory rising, demand falling, expected market time on the rise, and mortgage rates. So first I want to talk about the inventory because that's usually where people start, like what's available out in the marketplace. And I'm here in the Orange County market, so where you are may be different, but in all of Orange County, and we're a fairly decent sized county, there's only 3,987 total homes. And the more important one is that about 1.2 is the average. When you look at across like houses and condos and all that. So the average 1.2. So for homes available in all of Orange County that are below the $1.2 million mark, there's only 2,157 homes, townhomes, condos, that kind of thing in all of Orange County. And the rest of it's over 1.2 million. So if you're a buyer that you're like, I'm not over 1.2, you only have 2,157 homes to choose from. So that's one thing. And just a perspective, that inventory total of 3,987 homes is below the 2019 and 2020 levels. And so we're not overabundant in the inventory. For demand side, and that's the number of homes that go into escrow over the prior month, that's down. So we have a total of 1,700 that had gone into escrow over the last month. And just to give that perspective, the 3-year average is 2,578 homes. So we're down from that average about 878 homes at this time of the year. The last thing I want to talk about is, well, the second to the last is market time. So in the market time, and that's the time that you would expect when you put your home on the market, how long is this going to take? And before, when the market in the beginning of the year was red hot, things were flying off the shelf over the weekend, but the average was about 17 days for homes that are priced below $1 million, which was really quick. So some homes sold really quick. Some took a little longer. Maybe they had pricing problems. Maybe they were priced too high, or the condition of that property. But the average was 17. And now we're sitting at an expected market time of 67 days. And so that's taking a little bit longer. So sellers need to be aware that that's taking a little bit longer. So they need to do some moves to try to, if they have to sell it quicker than that, they're going to have to make some moves. The other thing, the factor is the mortgage rates. So let's talk about the mortgage rates for a second. And this is an area that we might have a little bit of a silver lining, because you've probably heard the headlines, recession and all this kind of stuff. Well, and also the Fed recently just raised the overnight rate to the banks by another 75 basis points, bringing it up to about 2.5% or so, which they call neutral. And I'm here to tell you that inflation is going to remain hot. And so this recession that the government is saying is not a recession, well, let's call facts a fact. So we're in a recession. It's not a deep recession or anything like that, but we are in a technical recession, and that's 2 negative quarters of negative GDP growth. And that's what we've had. We've had 2 consecutive quarters printing of a negative GDP growth. So by all definitions for the last 50 years, we're in a recession. And that's actually a good thing for mortgage rates. And so what we're seeing is in the beginning of the year, we were right around just under or right at 3%. And it rose all the way through June to about 6.25 in some markets. And so that was a huge rise, and that just destroyed demand for some buyers. Some buyers just could not absorb that, and they fell out of the market. And so what's happened since June, though, is that since that peak of around 6%, the mortgage bonds, they have been dropping steadily, and the bond market's pricing in that recession, and it might be a more prolonged recession. So that's kind of the silver lining, because if you look at what you actually pay for a house the mortgage rate will make a huge difference. So right now, I talked to a couple mortgage buddies yesterday, and we're back down in that 4.5%. So we went all the way up to 6%, maybe a little higher than that, and spiking. But we're down back down into that middle fours, some places, maybe even a little bit lower if you're buying the rate down or something like that. Recently, I was hosting an open house at one of my listings, and I met a buyer that came in that said, that they had been priced out of the market. So they had stopped looking. They kind of were resolved, okay, I guess we're going to have to go back and continue renting. But the rents were increasing steadily, and that's something that's not going to change. And so that buyer, now that the rates have dropped back down, has been like, okay, I need to get into a house now because it's much more affordable in doing that. So just to give you an example of the power of the interest rate and how that makes a difference, unless you're paying cash, the interest rate matters, and it matters in a big way. So if you take like a purchase price of somewhere around like 900,000, put 20% down, you're going to have a loan amount of 720,000. So let's use that as the example. So at 720,000 at a 6% interest rate, your principal and interest payment is going to be $4,316 per month. Okay, it sounds like a lot, but that's what it is. And some people's rents for that same like 2.5, 3-bedroom place is going to be approaching, over 3,000 for sure in our market. For that average, and in some places it's approaching more closer to like middle of that 3,500. So it's just a little bit more than what rent is. So, but that's at 6%. So it's still not bad. If you're paying rent and you have a 6% rate, get into it, save yourself from having to pay that rent because you're paying the landlord's mortgage for them. You might as well be paying your own mortgage and getting a tax write-off. But here's the power. So if that mortgage rate, which is now dropped back down into the 4.5, that same $720,000 loan amount gives you a payment of $3,648. That's $668 lower than previous. So that's huge. And that's per month. And so that's a big difference on that. And so when you multiply that over the life of the loan, 668 times 360, suddenly you realize, wow, that's quite a bit. You're going to be paying 180,000, I think that math is, more for that home by having a higher interest rate. So just saying that you want to be able to take that. So here's my advice to buyers today. Get out there in the marketplace. If you're renting, you're paying, and your rent's going up, you need to consider taking advantage of what's happening in the mortgage rates as they drop right now, because right now it doesn't look like we're going to be avoiding a recession, and it might get a little bit deeper. So you might actually see the rates come down. And if 2 years from now or 6 months from now, it's back down into the threes, you can always refinance that and even get a better rate. But here's my advice. Get into the market, go ahead and negotiate your best deal on the price. Knowing that the interest rate has dropped into that 4.5, you could see what the difference of payments are. And that's going to actually be determinant of what you actually pay for that house, more so than the price. So the price isn't dropping to 180,000, but you by getting a lower interest rate, you're able to save quite a bit. In fact, in your negotiations, you might be able to get the seller to chip in to be able to buy that rate down as a part of your negotiation. So consider that. Also, as the prices have softened a little bit, take advantage of that and negotiate. You can also be able to get a little bit more on the terms of being able to get repairs made, things that previously you weren't able to even ask for it because they had 15 offers behind them and they could sell it as is, and you'd be glad to just get into a property. Well, now things have changed a little bit. So you're able to kind of negotiate some of those repairs, the terms, termite, that kind of stuff. So you're able to get more out of it. So also, because there's more inventory to choose from, you don't have to rush in like before and buy the very first property that comes your way, and you have to settle and be happy with it. And now, because there's a little bit more inventory, and again, I just want to stress that we don't have a glut of inventory. So it's definitely rising from what it was before, but we were critically low before, and now we're just starting to inch back up, still well below what 2019 and 20 was as far as inventory goes. But that is rising. So you're going to have a little bit more choice. So take your time, look around, look through some open houses. Those are starting to come back now. More homes are on open houses. So get out there and look at the properties and be able to make a selection, but take advantage of those interest rates. Now, my advice to sellers is that you need to be aware of all this. So the average time is definitely risen as far as what you should expect for how long it would take you on average to sell that property. So my advice is three things. You need to have the home priced right to start with. Okay, so if you're considering selling, price is going to be very important for you to launch out with the right price. The other thing you might consider doing is consider staging and getting a pre-listing inspection so that you can address anything up front that a buyer would be concerned about. It's going to save you money in the long run by go ahead and taking care of that so that they're not asking for a big credit or anything like that. You just want to take some of that ammunition away from the buyer by doing it up front. So talk to your agent. And that's what I recommend on that. And then the last thing is that you need to understand that buyers are going to try to negotiate with you. So be patient with that, and also be able to understand that you may have to negotiate. If you need to sell that property and someone's willing to buy it, you need to come to a meeting of the minds and be able to get that house sold for you so that you can move on to other areas, bigger houses, whatever you're doing. If you're downsizing or upsizing, or a lot of people right now are moving out of California because of jobs and what have you, and affordability too. So you want to take advantage of what we have right now as well. So buyers and sellers, those are my advice to you. And that's my market update for today. Don't forget to subscribe and like this video and drop a comment in the section below. And I hope you have a fantastic rest of the day. Thank you.